So now, when we say non-current assets held for sales, it means an asset. Like let's say you have, we already know that, let's say equipment is an asset, right? Is under non-current asset, and the same thing as a building is under non-current asset. We have example of non-current asset. They are under non-current asset. That means a non-current asset are asset that can be used more than a year. That means that can be used more than one accounting period. I mean, that it could be used more than in one accounting period. That's what we mean by non-current asset. Now, let me give you an example now. Now, an equipment or a building that is non-current asset can be held for sales. Held for sales, that means that you want to sell it. Now, that means if you want to sell it now, it will now be non-current asset held for sales. So if it's classified under PPE before, it will not be under PPE again. It will be under non-current asset. When a non-current asset is held for sales, it will be under current asset. And I will tell you the reason why it's under current asset is that that asset that you have held for sales must be sold within a year. Now, because it must be sold within a year, it does not meet the definition of non-current asset again. So that's why you classify it under current asset. So when an asset is held for sales, when a non-current asset is held for sale, it will be under current asset. So we are going to go to discontinued operation later. So when an asset, regardless of the asset, when it is held for sales, it will be under non-current. It will be when a non-current asset is held for sales, it will be under current asset, because that asset must be sold within a year. And because it must be sold within a year, it does not meet the definition or criteria to be classified as non-current assets. As non-current asset, it will be under current assets. Now let's go to the classification. Let's go to the condition for an asset to be classified as non-current asset. So the condition, let's go to the condition. Let's go to the condition for classification. Condition for classification of non-current assets. That means condition for an asset to be classified as non-current assets held for sales. That means that asset may be PPE before, maybe under PPE, but once it has been classified, the asset has been classified as held for sales, that asset will be under current asset. It will be under current asset. But let's look at the condition, because there are some condition. All these conditions I will list out is compulsory. That means if any of the condition is not met or is violated, it means the asset cannot be classified as held for sales. That means the asset cannot be classified as held for sales. So what is the condition? There was a diet where Ifrs 5, it was almost 3 diets in a row. They were asking questions on Ifrs 5, back to back on Ifrs 5. The condition that is for an asset to be held for sales, and they will now put some calculations to it. So please don't joke with it. So let's look at one of the conditions. I will summarize for you so that you understand it. Now, one of the conditions for an asset to be classified as held for sales, that means an asset that is non-current asset to be classified as held for sales. This is one of the conditions. The asset, you may not need to look at the grammar that is written there in page 93. The asset must be available. The asset must be available for immediate sales. Can you see now? for immediate sales in its present condition. I will explain that later. 2 is that the management, that means the management of the entity, the management must be committed, to the plan, or must be committed to sell the assets. So 3 now is that there must be plan to locate a buyer to sell the assets. Please, all these things I'm noting down, please try to write it down in your book. 4, these are the conditions now. Number 4 is that the asset must be available for sales immediate sales. So this one is the asset must be available for sales at a reasonable price. Must be available for sales at a reasonable price. So let's go to 5. 5. The sales of the asset must be completed within a year. Six now. Action required to complete the asset. That means the action. That means if these conditions are not met, an asset cannot be classified as held for sales. So let's look at it now.
Condition.
Sir?
The action required. Number 6.
6. The action required to complete the plan to sell. The action required to complete the plan to sell must not be withdrawn. So let me explain it now. That means for an asset to be classified as held for sales, all these 6 conditions must be met. All these 6 conditions must be met. The number 1 condition is that the asset must be available for immediate sales in its present condition. That means if I'm to sell this my tab now, I want to classify this my tab as held for sales. That means I can't say let me repair the screen first. If I repair the screen first, I will now sell it. That means the asset is not available for immediate sales in its present condition. Now, if you are still pondering that you need to change some parts, you need to paint it to make it look good, or maybe a building now, I need to renovate the building before actually selling it. That means that asset cannot be classified as held for sales. That means an asset must be held for sales when an asset is available for immediate sales in its present condition. That means the condition in which that asset is now, you are ready to what? To sell it. That's condition 1 now. The 2 is that the management must be committed to sell the assets. That means you are not saying that there's a probability we want to sell, but let's see how it goes. That means the management must be committed to sell the assets. They must be committed. That means they have plan to sell it. 3 is that they must be planned to locate a buyer to sell the asset. It's not that they are committed to sell the asset and they are not finding who to buy the asset. That means that asset cannot be classified as held for sale. There must be planned for them to locate a buyer. Where can we get a buyer? Do we go to the market to get someone to buy it now? Do we do advertisements? That means there must be planned to locate a buyer to sell the asset. The asset must be available for sales at a reasonable price. Look at it now. An asset that worth 100,000 naira in the market. The market value of an asset is 100,000 naira. And an organization wants to classify that asset as held for sale. They want to sell it. They want to classify as held for sale. That means they want to put it for sales. Then I say they want to sell the asset for 300,000. That means the asset is not available for sales at a reasonable price. Who will buy it? That means they are not serious. Nobody will buy it because the asset is not available for sales at a reasonable price. So you can't say the market value of an asset is 100,000 and you say you want to sell it for 300,000. Who do you want to sell it to? That means you are not committed to sell the assets. So let's go to 5. 5 is that the sales of the asset must be completed, must be completed within a year. Must be completed within a year. That means that sales must be completed within a year. That means that is the reason why when an asset, maybe PPE or land and building or property plan and is under PPE, when an item of PPE is not classified as held for sales, it will not be under non-current asset again. It will be under current asset because it does not meet the definition or criteria to be classified as non-current asset. So you will see it. Asset held for sales is normally seen in current asset because the asset must be sold within a year. Am I communicating? Now that's where you have. That's why an asset held for sales is under current asset. Now, lastly, the action required to sell the asset, the action required to complete the plan to sell the asset must not be withdrawn. That means once it is withdrawn, you will classify it as PPE. You will classify that asset as PPE. It will no longer be asset held for sales again. These are the conditions. Please know the condition. I've summarized it for you. Like me now, if you wake me up now, I can tell you this condition. I will tell you at least 5 out of it. So please know the condition. Am I communicating? So let's go to the measurement now. So when an asset is held for sales, what's the measurement? What's the measurement? When an asset is classified as held for sales, what is the measurement now? So I won't spend time on it. So can I wipe up this side? Are we good?
Fair value less cost of
Is lower. Now when the fair value less cost of sales is the one lower, are we together? So let me come back because I think I pressed the button for the recording now. So that means the measurement of non-current asset. That means when you want to measure the value of a non-current asset held for sales, it is measured at the fair value less cost of sales and carrying amount. So which one is lower between the two? That's what you pick. But however, if the fair value is the one lower, that means you need to recognize impairment loss. If the fair value is the one lower, you will need to recognize what I say, impairment loss. But if the carrying amount is the one is the lower amount, that means you don't need to do anything. Just continue to value or to carry that asset at the carrying amount, because the carrying amount is the value of that asset in the statement of financial position. So you don't need to do anything. Just continue to value the asset in the statement of financial position. In the statement of financial position. That means that asset now, you will remove the carrying amount from the PPE, because that is a non-current asset. So if it is under PPE, you remove it from PPE. The amount you have removed from PPE now, you now come and add it or put it under current assets. Don't worry, when we solve past question, you will see what I mean by that now. Now look at this question now. The carrying amount is 2 million, while the fair value cost of the sales is 1.2 million. So which one is lower? So the asset will be valued at fair value less cost of sales of how much? 1.2 million. Because it's fair value less of sales that is lower, you need to calculate the impairment loss. So the impairment loss will be the difference between the fair value less cost of sales and the carrying amount. What's the difference? So that will be 2 million minus 1.2 million. That will give us what? 800,000. That means this 800,000 will be taken to statement of profit or loss account. That means the value of the asset will now be what? Reduced by 800,000 to account, because in the statement of financial position, that asset is already carried at 2 million. So for you to reduce it to the fair value, you will now remove 800,000, which is the impairment. The value of that asset in the statement of profit or in the statement of financial position will now be 1.2 million. You can see now, it will now be the fair value less cost of sales. But if it is the carrying amount that is lower, you will not do anything. Don't recognize any impairment loss. So just continue to value the asset at the carrying amount if the carrying amount is lower. Am I communicating?
Hello, sir.
I'm with you, sir.
Okay, this IFRS 5, there's no need for us to consider the value in use.
Value in use. There is no value in use in this question. Kò sí value in use in there. It is value in use is in IS 36, impairment of assets. So kò sí nǹkan. This is what the IFRS 5 say you should measure. This is how they say you should measure non-current asset held for sales. Efficient fẹ́ show mi pé ẹ ti kàwé jìnnà. Now, I've told us now, discontinued operation. Discontinued operation, I'm on page 100 now. Sorry, I forgot to on the video. Now, discontinued operation can be defined as, according to IFRS 5, as a component of an entity that either has been disposed of or as is classified as held for sale. Whether you have sold it or you have classified it as held for sale. Let me give an example now. Let's say Dotun Limited now has a bakery. Don't let me say bread now. Has a bakery. It's into bread production. Let me say bread. Now, I'm into bread production. That means I produce bread, I make dresses, and I sell provisional. That means if I decide to close the operation of sales of production of sales of what's it called? Provisional. That means that's called discontinued operation because it's a component of an entity. If you have been to Ceci now, if you have been to Ceci supermarket, you will actually see where they sell kitchen items, cream, drinks. They even, I think they sell dresses and some sporting equipment. Now, if they decide to close the section for bread now, you know they make bread too. They make bread. They decide to close the section for bread. What has happened now? That means that is called discontinued operation because they have closed it, meaning that they want to sell it off. That means they want to give it out to someone to be using. That means they don't want to continue in it. That's what we call discontinued operation. Whether that operation has been held for sales or has been disposed of. Are we together now? That's what we call discontinued operation. That means when an item, when let's say a discontinued operation does not mean that if they have not seen a buyer for it within a year, that means that operation, that discontinued operation can still be generating revenue. They can still have their own assets. They can still have their own liability. How do you now account for it? That means when you are accounting for discontinued operation, you will not include it with the continued operation. That means when you are preparing the statement of profit or loss account, you will not include it with the discontinued operation. So that will take me to page 102. Page 102. So let's look at page 102. So let's go to discontinued operation now. So let's go to page 102. Page 102. Please follow me as I. So how do you treat discontinued operation? Last do that, I think they asked question on this discontinued operation. So let's go to illustration 8.6 in page 102. Illustration 8.6 in 102. They said the following are the map summary of Kapu Nigeria Limited, which closed one of its major geographical branch. That means they have closed their geographical branch. That is a discontinued operation. That means they have closed the operation of that geographical branch. So they gave us the revenue, the cost of sales, the income, administrative expenses, marketing expenses, and tax and income expenses for both the Kapu and close operation. That means in some question now, they will give you the total of both the close and the continued operation of the company now. So you will be the one that will now be removing the revenue of the discontinued operation from the company now. Look at it now. So they now say he has a carrying amount. That means he has a carrying amount of an asset. That means his land and building is 40,000. That's 40 million. The machinery is 10 million. Office and equipment is 3 million. So they're giving us an information. They now say for this disposal group, that means the asset, the cost of the asset that Kapu is using now. They have given us the close what's it called, branch. They have given us now. Now they are now giving us the fair value less cost of sales to be 64 million, and they gave us a provisional tax of 1.5 million. They now say we should prepare the statement of comprehensive income for the year. Whenever you have discontinued operation, the value, that means the revenue or the expenses that is incurred for the discontinued operation, will not be part of the revenue that you report in your comprehensive income. Now it means that you will go and calculate the profit that is made or loss that is made on discontinued operation. You will now come and add it or put it to statement of comprehensive income or statement of profit or loss account. So let's prepare the statement of comprehensive income now. So statement, the name was Kapu Limited. So they said we should prepare statement of comprehensive income for the year ended what? For the year ended 31st December 2019. I think so. 2019. Look at it now. Can you see? Can you see the board? My solar lab just went off now. Can we see the board?
Yes, we can.
You can. Okay. Now you can see the board. You can see the board, right? So let's manage it. So don't forget, I told us in some question they may give you the revenue of both the closed branch and the continued operation of that business. That means those that have not closed, they can give it together. You need to remove it from it. But in this question, they have removed it already, so they have separated it. So what's the revenue? So these are to calculate statement of profit or loss account or statement of complete. What's the revenue? The revenue for Capo is how much? Don't forget, it is approximated to the nearest thousand. We have approximated to the nearest thousand. So we have 60. Am I communicating? 60. What's the cost of sales? Can we see the board? Can you see the board?
We are managing it.
Okay. So what's the cost of sales? The cost of sales is 25. So that means we give you gross income, gross profit. I'm still going to give you statement of profit or loss account. We give you a gross profit of how much? 35. Now we have other income. So add other income to it. Other income is 9,000. So when you add it, you have 44,000. You have 44,000. You have 44,000. So now we have this will give you a total profit or your total income. Total income. Now let's go to, we have administrative expenses. All this thing I'm picking is for Capo, not for close what's it called? For the closed branch. We have admin expenses. What's the admin expenses? Is in the question. The admin expenses is 10 million because we have approximated to the nearest thousand. That means if you see 10 here, there should be 3 0 at the back, and that's what we have done here. Now we have marketing expenses. What's the marketing expenses? So you remove the marketing expenses from it now. Marketing expenses is 22,000. So when you remove it, what do you have? What do you have? So this one will give you 32. 32 minus this will give you 12. It will give you 12. Am I communicating? It will give us 12. 12. Now, that 12 is what we call profit before. Profit before. Can you see the board? Are you sure you can see it?
Yes, sir.
Let me bring it nearer. So you have profit before tax. So how much is the tax? Is in the question. No? How much is the tax in the question? They said the tax expenses is tax expenses. And anything expenses should be removed. How much is the tax expenses? That's 6 million. That will now give us 6. 12 minus 6 will give us 6. So this is profit from continue operation. That means the operation that have not been closed. So you need to calculate your profit or loss from discontinued operation now. So we want to calculate because the profit or loss, that means the closed branch, the revenue that we have made here is not part of the closed branch. So you need to calculate the profit that was made on the closed branch separately. Look at it now. That means the profit from the discontinued operation. What's the profit from the discontinued operation now? That's what we want to calculate now. From the discontinued operation, that's what we want to calculate. Look at it now. So you need to prepare. How do you calculate it? The same way you have done for it, that's how you will do it for the discontinued operation. So just write the revenue. How much is the revenue? How much is the revenue they are making? 20,000. It has been approximated to the nearest thousand. So the cost of sales. How much is the cost of sales of the discontinued operation? That's why we are calculating profit from the discontinued operation now. Is how much? Is 5,000. So when you remove it, what do you have? You have 15. That's the gross profit. Now, because that brand they have closed is still making, it has generated revenue for that year. Even though they have closed the operation, it has generated revenue before, maybe before they close it. So it needs to be accounted for separately. So what are the other income? You have other income of 500. So you had it, that was 15,500. That's the total income now. So we have administrative expenses. How much is the administrative expenses? Is 4,000. You remove it. You have marketing expenses to be 3,000. You also remove it. So when you remove it, what do you have? What do you have? You have 8,000. 8,005. So look at that question now. They said tax income. So tax income means that they have given them tax credits. So it's an income to them. You not deduct it because it's tax income. It's not tax expenses. Because it's tax income. How much is the tax income? Is in the question, no? 1,000. So you add it to it. So that will give you 9,500. That's 9.5 million because it has been approximated to the nearest. Now, am I communicating? It has not stopped. Oh. Now, that's not only the profit. They said the asset. They gave us the carrying amount of the asset. That means of the disposal group. What's the carrying amount of the disposal group? So they gave us the carrying amount, the land and building that closed branch is using. They gave us. How much is it? They gave us 40,000. Machinery 10 million is in the question. Office equipment, inventory, and others. Now, what you will do now is that for you to calculate the net assets now of that closed branch now, add all the assets together and less it from the liability. Add all the assets together and less it from the liability now. To know whether you have made an income or profit on the assets. Look at it now. So let me do the work. The working did not contain here. Now, someone should add it together. So let's do it like this. Add all the assets together. That means land and building 40,000 naira, machinery 10,000, equipment 3,000. That will give you what? That will give you 53,000 plus inventory. What's the inventory? So 53 plus 12. Inventory is 12. That will give us 65,000. Now we have we have trade receivables. Trade receivables is how much? Because I don't want to wipe up the board, that's why I'm doing it here like this. So trade receivable is, you're supposed to add it together. Trade receivable is 6 million. So that will give us 71,000. Now trade payables and accrual, they are liability, so you remove it from it. So 13. So remove 13 from this, you have 0, 11 from 3, that will be 8. 6 here, it will be 5. We have remove 3,000. If you remove 3,000, that will be 55. So the net asset is 55. Now they now say the fair value less cost of sales. Are you getting what I'm doing? Please, are you getting what I'm doing? Mr. Duile? Hello?
Sir, I'm with you, sir.
Are you getting what I'm doing?
I'm trying.
You are trying. Okay. Now, when you add all the asset and liability together, what do you have? That means we have 55,000. Am I communicating? We have 55,000. So because this is not the profit they made, this is the profit they made before the business was closed now. That means they have now sold the asset now. They have sold. It has been assumed that closed operation has been closed. Now they will also, let's say whether they will make a profit or loss now. This one should be profit or loss. We don't know whether it's profit they make or loss. Before we, you can't see the board now. Can you see it now? So profit or loss on discontinued operation now. But they made a profit. It's profit that they made. So let's look at the profit or loss on the sales of that will be made on the sales on the discontinued operation now. You don't know fair value less of cost of sales. Jẹ́ fair value less cost to sell. You don't know jẹ́ is in the question. Fair value cost to sell. You don't know jẹ́. 64. Èló ni? 64 million. Don't forget that we have approximate to the nearest thousand. So that 64 million will now be 64,000 because it means that every amount you have, just like what we have calculated to be, there's a zero at the back. So that's 60,000 means it is 60 million. So that you not miss it together. Now, what is the net asset? The net asset of that discontinued operation. What's the net asset? It means net asset is what we just calculated. Add all the assets together, remove it from the liability. And what do we have? After we have removed it, we have 55. So 55. So if the carrying amount of the asset is 55 and the fair value and less cost of sales of that disposal income is 64, that means you have made a profit, right? Am I communicating? Now, in Koko, what asset Kenny and liability Kenny is 55 million. And if you are to sell it, you will sell it for 64 million. That means you have made a profit. Profit of how much? 9 million now. Am I communicating? You have made a profit of 9 million. So let's move forward now. Now, they now say for you to sell it now, you will make a provisional tax. You will pay a provisional tax of 1.5 million. Am I right? It's in the question. Is there provisional tax of 1.5 million? So you need to remove the provisional tax here. So the provisional tax. I've told you that we have approximated to the nearest thousand. So that 1.5 million will be how much now? 1.5. So provisional tax of 1.5. So remove it. So that will give us what? 7.5. So what is the profit that was made on the asset now? That means when the asset is to be sold, they will make, when that discontinued operation is to be sold, they will make 7.5 million. They will make 7.5 million. Am I communicating? They will make 7.5 million. And before the asset was discontinued, before they closed that operation, they have made a profit. That means the revenue and the sales, that means the revenue they have made before the asset was discontinued, it is that means they have made a profit before that asset was discontinued. Let's say now you have a taxi. That taxi has been working over the years since September. Now you now want to sell the taxi now. You know the taxi could have generated revenue and incurred expenses, and that's what we have done here. So during the cost of operating that discontinued operation, they have made a profit of 9.5 million. And when the asset was when the uh, when the it's not even asset, when the discontinued operation was closed and was sold, they made a profit of 7.5 million. So what will be the total profit they have made now? So you add the both together. So it will now be here now. You now go to where we have calculated here. It will now be profit from discontinued operation. Can you see now? From discontinued operation. Eloni, it will be 7,500 plus 9,500. That's how much?
17,000.
That will be 70,000. So you had it 70,000. Can you see now? That means that means the discontinued operation is not actually included in the statement of comprehensive income or statement of profit or loss account. That means you go and calculate it as working. If they have made a profit or loss, you now add it, you now bring it to this place. After you have calculated your whole revenue or profit for the continued operation, you now go and do the discontinued operation as working. Am I communicating? If you add it together, that will give you how much? It will give 17 plus 6.
Okay, 17 plus 6.
That's 23. So 23 will now be your profit for the year. Am I communicating? That will be your profit for the year. There is no item of other comprehensive income here. So that means the other comprehensive income will still be 23. So we have come to the end of this what's it called?